Hi guys, Christian here from the MCI Trading Academy with the latest stock market analysis for the week ahead. And can I just start by saying what a brutal week we've had last week in the stock market, and what an amazing week we've had here at the MCI Trading Academy. We actually caught all the moves that occurred last week live in our Discord community. Guys, if you aren't in the Discord community, make sure you go over to our website mcitradingacademy.co.uk and request free access. There are no fees for being in the community, guys, so make sure you request your access as soon as possible. It's a community full of traders where you can share your knowledge and other traders can share their own knowledge. And the team here at the MCI Trading Academy has actually shared a lot of profitable trading ideas and setups over the last couple of weeks, and the traders have benefited a lot from this, the traders in the community, guys. So make sure you request your access as soon as possible. Now guys, the stock market bottom is not in yet. However, my sources are telling me that we are getting close to a short-term bottom in the stock market. So make sure guys you watch until the end, because we have a lot of important things to go through in this week's video, guys. First of all, we'll start off by doing a quick review of the brutal decline in the stock market last week. Then we'll move off and discuss about the Japanese yen. Guys, the Japanese yen is at extreme levels. The USD JPY pair, it's at levels that we haven't seen in over 30 years, and there's some things that you really need to see on there. Then we'll go over and discuss the VIX. There are some important levels that we need to watch in the VIX in the coming weeks. We'll also be going through the economic calendar, the earnings for the week. There are some large companies, guys, that are reporting this week. And finally, we'll finish off by doing the analysis and trading setups for the coming week, guys. So an action-packed video. Make sure you watch until the end, guys. As always, guys, if you do find the video useful, please don't forget to like it and also share it with anyone else that may also find it useful. And if you are new to the channel, guys, please consider subscribing. We do bring out a new video every single week analyzing the stock market, and we have a lot of new content coming up very soon. Now, let's start off by discussing what happened last week in the stock market. Now, guys, we did give this out live in the community, the CPI announcement. Now, we did mention prior to the announcement that if we will have a lower than expected CPI, then we are most probably going to rally. And if we are going to have a higher than expected CPI number, then we are most probably going to crash. We gave this out prior to the CPI data in our Discord community. As I've mentioned before, if we get a higher than expected CPI number, we are most probably going to crash. And if we get a lower than expected CPI number, we are most probably going to rally. And guess what? We did get a higher than expected CPI, and we crashed exactly as we have anticipated. Now notice how prior to the announcement, we did get a move higher, clearing all that liquidity and inducing a lot of buyers. And then guess what? The CPI data, the CPI number came out. It was hotter than expected, and we did crash. Now, we did mention again in our Discord community that if we are going to crash, then that is going to be short-lived. And we did advise all our community members that prior to the US Open, just before 2:30 UK time, everyone should close all their sell positions and start looking for buying opportunities. And just to show you proof of this, guys, let's go over to our Discord community here. And I did say just before the US Open that there was way too much panic, which told us that perhaps we'll be going higher. Plus, we were at key levels. Now, what key levels are we talking about, guys? We discussed this, in last week's video and over the last couple of weeks. We did mention that we were at I was looking for this gap here on the weekly chart to be filled, and once we got that filled, I will be looking for buying opportunities, and this is exactly what happened during the during or after the CPI data. After the CPI announcement came, we went right all the way down. We filled that gap, and we went lower below the lower expected move, and this was exactly what we were looking for, guys. We were looking for this gap to be filled, and we were looking for that for us to go below the lower expected move, and that would have been the perfect um, risk to reward trade. And you can see here, guys, as the US session opened, we went sideways for a bit, and then a big rally up. Now, what caused this rally is the number of puts. As you can see here, the because we dropped so heavily prior to the US session opening. When the US session did open, all those people that had puts, the puts were obviously in the money. They went off over and closed all their puts to cash in on those gains. As they closed in on those gains, uh, people started opening calls, and hence the market makers, they had to start hedging and hence buying the stock market. This was pure technical, guys. This was a pure technical move, nothing else. They didn't rally the stock market because the CPI data was good. No, it was worse than expected, and this is really, really bad for the stock market. The higher the inflation data, it means that the Fed has to do more work and has to keep interest rates higher for longer, guys. So this was not what the Fed was expected, not what anyone pretty much was expecting. But there you go, it is what it is. So uh, the move that happened last week, guys, it was pure technical. Again, if you aren't part of the community, make sure you go and request your free access, because we call this live in the community, as I've mentioned before. Now let's go over and discuss the Japanese yen. And guys, we've been discussing this over the last couple of weeks. We discussed how the Bank of Japan had to intervene to save up the yen. However, that didn't help at all, because we were right back to where we started, and even worse just before the intervention started. And now it's even worse than that, guys. We're at levels, the USD JPY pair, we're at levels that we haven't seen in levels prior to 1990, guys. Okay, so just over 30 years right there. Okay, now we've mentioned, okay, in our the last couple of videos that we've done about the intervention that occurred in 1998, and you can see here when the Japanese bank intervened to save up the yen in 1998, we had a big relief in terms of the Japanese yen. We had a big rally in the Japanese yen. Now the Bank of Japan intervened last month, but we can see that didn't help at all. Why? Because the currency keeps weakening. Now there's an article that occurred that came up over the weekend discussing the Japanese yen, and that FX traders, they eye Japan response as yen approaches 150. Now the analysts see 150 as the next key level for a possible intervention. Now if this is going to happen on Monday or over the coming week, guys, this is going to be big. The Japanese yen most probably will rally big. So as full disclosure, guys, on Friday I've actually uh, loaded up on some Japanese yen, just a very small position in terms of USD JPY, just to see if we can get that intervention. It will be purely mechanical and nothing else, guys. Okay, so if you are in the same position and you believe that the Bank of Japan will intervene, then perhaps you can do the same. Now let's go over and discuss the economic calendar, guys. In terms of economic news, there isn't a lot to talk about this week. We have some uh, news, some economic data coming out of China on Tuesday in terms of industrial production and GDP year-on-year quarter 3. And then we have some data here in the UK in terms of the inflation data in the UK. Now, I don't think this will have a lot of impact as the CPI data in the US. Here in the UK, however, it may have some impact in terms of the GBP, so you can watch out for that. And in terms of US, there's some news on Wednesday as well, but nothing critical, guys. The big things to watch out for this week will be earnings. We have some crucial companies, some large companies reporting this week. On Monday, before the open, we have some more financial companies that are reporting, but the ones to watch out for, guys, the most important ones will be Netflix on Tuesday after the US market closes, and on Wednesday after the US market closes, we have Tesla reporting. So Netflix reporting on Tuesday after the close, and on Wednesday we have Tesla reporting. Now, guys, if both Netflix and Tesla disappoint in their earnings and they have weak forward guidance, we will have a big crash in the stock market this week, guys. So it's crucial that you watch out for their results and for their forward guidance, guys. This will be crucial in terms of what will happen, what will dictate the sentiment of the stock market this week. Now let's go over to the charts and have a look at the important key levels to be watching out for the week ahead, starting with the S&P 500. Now, guys, as you can see here, we finished the week as a doji, and most importantly, we finished again we've ended the week below the 200-week EMA. We've tested this from below and we failed to close above it, and this is very, very negative. However, guys, there are some positives to take out of this by looking at the daily chart. And here, guys, you can see that we've made a new lower low. However, we have divergences that are building here, which suggests to us that the momentum of the sellers is slowing down. And if this is to be the case, guys, all we have to watch out for this week is to just see some sort of break of structure, guys. I would love to see a close above this level here to suggest to us that we are now looking for some buying opportunities. One thing that I'm actually looking for is the VIX, and most importantly is the VIX, the level, the 35 level, guys. We haven't seen capitulation in the stock market as of yet, and this scares me. We've dropped a lot this year, but we haven't seen capitulation. So one thing that I must say that I'm looking for is for something like for VIX to spike up above 35, go to 40, go to 45, and then real capitulation will occur. That will induce a lot of fear in retail traders, in market participants. Perhaps we'll have some liquidations that occur for some big players, and then we can say that we've got that bottom and we are confidently going to buy the stock market. Something that will be really nice to happen will be for the VIX to go to 40, 45 this week, will be for the S&P 500 to go down all the way down to our weekly IC here at 34.50, and then we can definitely say that we are going to buy the S&P 500 and hold it until perhaps the end of the year, guys. So that will be one, beautiful trade that we may be able to get this week. However, if we don't get that capitulation this week, all I can say, look for some break of structure. As it stands, there is nothing positive about this chart here. However, if we get close above this level, then we can say that we may be able to get a higher low and a higher high to come until the end of the year, and that will be very, very positive. Next, let's head over to the UK 100, and guys, we smashed this analysis. We smashed this again. If you haven't watched our video last week, make sure you go back and watch it. I'll put a link in the description below, because exactly what we said actually happened. So we talked about in the video that we made 2 weeks ago about this liquidity being grabbed here and then a big crash, which we did, and I was expecting price to go into this 8-hour IC, which guess what, price did exactly that, came to this 8-hour IC and had a big bounce from it. Now guys, this doesn't look again positive at all from a technical analysis point of view. From a weekly point of view, guys, again, very, very negative. We closed again below the 200-week EMA, so there's nothing positive about this chart. The only thing I'm looking at here, guys, will be this IC over here at around 66,590 or so. If we manage to hold this level here and then break above, then we can say that we can get some buying opportunities in, so get some consolidation around this level. If we don't, then guys, there's nothing else that will that I'm seeing on this chart. I'm looking for this IPA here to be filled, and perhaps for price to come into this 1 week I see at around 5,900, guys. So if we do lose this level here at around, as I've mentioned, 6,590 or so, then we are going all the way down to 5,900, guys. So watch out for this. It's going to be crucial this week, guys, I think, for sure. So make sure you watch it this week. Next, let's go over to the DAX, and guys, here same situation. Now if we start off by looking at the weekly chart, we failed again to go and close above this narrowing channel. So it seems like we've broke the narrowing channel to the downside, and we tested this twice now without being able to close above it, or within it, I should say, and this is very, very negative, guys. Again, as all the other indices, we have a lot of negative news which definitely affects the stock market. Now one thing that I'm looking out in here, guys, would be this 4-hour IC here. If we manage to hold this 4-hour IC and have some consolidation and perhaps a break of structure, then that would be some positive, and we can say that we can start to look for some buying opportunities. However, if we are to lose this level this week or in the coming weeks, guys, then we are going lower. We are going a lot lower, all the way to where? To this weekly IC. 1 week IC at around 11,100 or so, guys. This is crucial. If we lose this level this week, there is nothing else that will hold this down, guys, that will hold this up, I should say. So this will be critical this week. So it seems that all indices are at key levels to watch this week. We may get capitulation, in which case we may go lower, but it depends where do we close the week. Do we close it lower or do we close it higher? Because if we do close it lower, then we are going lower, but if we do manage to go lower and manage to close higher by the end of the week, then that will dictate how the rest of the year will perform, guys. So very, very important, and make sure you follow up this week. Next is US 30. Again, very, very negative. Now one thing that I should mention about this is that we've made a lower low, we've made a lower high, and we haven't made a new lower low. Why haven't we made a new lower low? Because of earnings, guys. We've mentioned on Friday we had financials. We have a lot of banks reporting on Friday, last Friday. And as we know, the US 30, the Dow Jones has a lot of banks, a lot of financial institutions within it, and they seem to have done fairly well. Hence, is pushing up the index towards and helping it not to make a new lower low. Now, imagine Tesla and Netflix both do well this week. Now, Tesla and Netflix are a huge part of Nasdaq, guys, and the S&P 500. So if they do well, then they'll most likely push up the both indices. So something to watch out for. Again, here all I'm looking for, guys, is to see a break of structure. I'm looking to see if we can manage to close above this level. If we don't manage to close above this level, however, then I'm looking at the weekly IC here at 28 400 or so, where I'm looking for some consolidation, and perhaps that will give me some buying opportunities. Again, guys, on the weekly here we managed to close again below the 200-week EMA, and we failed to close above it. We've tested this twice and failed to close above it. So as it stands, very negative. However, we can see some buying opportunities, especially if we get that break of structure that we've been waiting for. Next, US 100, and guys, here is exactly the same situation in terms of the weekly figure here, guys. We closed below again the 200-week EMA. We've tested this again once, twice again, and failed to close above it. Now this is fairly negative. However, one positive to take out of this is that we are finally in this weekly IC, in this daily IC. We are in the daily IC, and we are seeing what positive divergences that are building up, which should give us some sort of rally. It indicates to us that the momentum of the sellers is slowing down, significantly slowing down, and there should be some buyers emerging, especially if earnings hold this week, guys. Again, as you can see, divergences on both the daily and the weekly as it stands, and this and we're starting to get that consolidation as we are in this daily IC. All we want to see a close above, and we want to see a break and a close above this level. Once we are able to see that and perhaps get a daily close above the 20 EMA, then that will provide us with some positive news that we can start to look for some buying opportunities, guys, and perhaps we may get this week. And one argument for that is the DXY, guys. Now the whole of last week I've been watching this 4-hour IC here, guys, and just notice how we just hovered around, consolidated around the whole week around the 4-hour IC, guys, which just suggested to me that the DXY is just at about its highest it can go for now, and we may be able to see some downside in the DXY in the coming weeks, guys. And unless we are able to close above this level, close and hold above this level here, then I believe we are going lower. And if we manage to close below this level here, which is around 112 100 or so, then I believe that we are going a lot lower, guys. So monitor this. Again, we are getting very overbought on monthly, on weekly as well. There's a lot of divergences that are building up, guys. We are overextended from the mean reversion here, the 20 week EMA, guys. So as a lot of things to suggest to us that for now the dollar is at its peak and we are looking for some pullback. And if we do get a pullback, then perhaps we'll get a rally in the stock market, and that will bond in very well, guys, with the US midterms. Guys, remember there's midterms that are happening where in November, which suggests that we may see a fake pump in the stock market just to get through the midterm elections, and once they get through them they can crash it back down again, no problem. But for now I'm pretty sure that we have that short-term bottom in sight for now anyways, but all depends on what happens this week, and all depends what happens with earnings. Next, guys, we get gold, and gold is again at a critical level. We discussed how we had this weekly IC here that held very well. Now, one thing that I'm looking at for this, guys, is this 2-hour IC. So monitor this 2-hour IC on gold here. If we manage to get here, consolidate, then we may get a push up to clear those highs, guys, at around 1730 or so. So that will be a very profitable trade if it does happen. So if price comes in at around 620 and consolidates, we can get a buy, stop loss below, and then target this 1730, this liquidity that is resting above here. However, guys, if we don't get that and if we lose this level, then what I'm looking for is for price to get all the way down to 1570 to this weekly IC. So if we lose the 2-hour IC this week at any point, which will suggest that the dollar will rally, which is very unlikely looking from a technical point of view that the dollar has any more strength in it, then I can see gold starting to rally from here. And if we do rally, then as I've mentioned before, I'm looking for those highs here to be taken as a first take profit, and then we'll have to reanalyze, also see where the DXY is sitting at, and perhaps we can get some more strength into it going into year end, guys. Now, lastly, let's discuss about cryptocurrencies more, about Bitcoin. And guys, we haven't had any sort of movements for the past couple of weeks in Bitcoin. Now, my sources are telling me that we are going to see a big move in Bitcoin. From what I'm understanding here is that there's no big players that are buying Bitcoin at the moment. There are only retail traders that are buying Bitcoin as it stands. They are seeing some opportunities. I'm not sure where they are seeing opportunities as it stands, but they are seeing opportunities and they are buying Bitcoin. And what I'm hearing is that they are letting retail traders buy Bitcoin as it stands, and then they will capitulate them together with the stock market at some point this year. They will capitulate them and go down all the way to around 12,000, 12,500 is the target that we've been waiting for as well. And at that point, that's when the big players will come in. As it stands, guys, there are no trades to be done with Bitcoin unless we break above this level. Then we'll get that double bottom activated, and perhaps we're looking at this 1-day IC. However, and if we break below, obviously I think we'll be stopping at around 12,000, 12,500, not before that. There is nothing to tell us that I will be stopping at any point before that. So for now, as it stands, just have some alerts set in, just watch out for some key levels, for those key levels, but apart from that, no trading to be done as it stands, guys. But most probably we are setting up for a big move in the coming weeks. That's it from me this week, guys. Thank you very much for watching. Please, if you haven't done so, please make sure you like the video and subscribe to our channel if you are new to the channel. And if you are new to trading or would like to learn more about trading, then head over to our website mcitradingacademy.co.uk, where you can find out more about the one-to-one mentorship courses we are offering. And guys, if you haven't done so, make sure you also join the Discord community for free. Thank you very much, guys, and I hope you have a great trading week.